Okay, we're back. We're going to talk taxes. Joining me to help me prepare my taxes is one of our college finance experts, Laurie Peltier. Hi, Laurie.
Hi, Ian. How are you?
I'm well. I've got some tax questions for you. I'm just kidding. I don't. I have some tax questions for you, but they're not specific to my taxes. That's a problem for me to solve on another day. The big question is, are there tax breaks that a parent can take if they are paying for their child's college education?
Yes, there's several. The two most popular are the American Opportunities Tax Credit, which is the most generous, and then the Lifetime Learning Credit. The American Opportunities Tax Credit is for when you're paying tuition and fees for undergrad,
Mm-hmm.
and you can take it for 4 years. They
Mm-hmm.
don't have to be sequential, but 4 years per dependent is the maximum. So some families kind of phase out of that. And the lifetime learning credit kind of comes up behind it. It's not as generous a credit, but it's still very helpful. And it can be used for grad school or say that 5th year of undergrad that you want to take a credit for paying tuition and fees.
Do you find typically that the lifetime learning credit is something that is used by parents for their dependents, or is it something that are used by adult learners who are going back to school in most cases?
Most cases, it's adult learners going back to school.
Gotcha. Now, what about qualification for these tax breaks? Is this something that any earner can qualify for, or are there income thresholds attached?
There are, unfortunately, income thresholds. And so if you're filing your taxes, married filing jointly, your adjusted gross income has to be below 180,000.
Okay.
If you're filing single, it has to be below 90,000.
Okay.
So there are many people who don't qualify for the credit, even though they are paying tuition and fees. And it doesn't matter how many children you're paying tuition and fees for, the threshold is the same, no matter how many dependents you have.
Is the credit always the same, regardless of income, or is there a sliding scale of some kind?
There is a sliding scale once you hit 170,000.
Okay.
So if your income's between 170 and 180 and you're filing jointly, you'll get a portion of it. At 180, you'll get nothing.
Gotcha.
But there is a sliding scale once you get to the top end of the threshold.
But 160 or 75 makes no difference in terms of the totality of the credit, the total.
Correct.
Okay.
Correct.
Gotcha. Now, what about loans and how do they fit into this, right? So I'm a parent and I've borrowed a loan and I'm paying for college. Do I still qualify for this given that I'm using a loan to pay for college?
Yes, you do.
What about if my student borrows a loan? Is that something that's available to them too?
So the student typically cannot take the credit. The parent is the one who's taking the credit. But there's two ways that your loan can come into play. Yes,
Mm-hmm.
you can pay for tuition and fees with a loan and still take the credit. It's just as if you paid cash.
Okay.
So you're still paying tuition out of your pocket. You're just paying the loan back later. And then there is another credit for paying back a loan called a student loan interest deduction. So you can get a deduction on your income if you're paying interest on a student loan or a parent loan. So it might
Gotcha.
not be while the child's in school, but when you're in repayment on the loan, that credit comes along.
And is there, let's say that it's student loans that are paying for my kid's education. Does that become a potential tax opportunity for me, a tax credit opportunity for me? Or is that something that would only apply to the student since they're the one technically paying for it? How does that work?
Right. That's sounds complicated, but basically the school is going to issue you a statement
Okay.
called a 1098-T. And every semester they'll send you a 1098-T showing what you were charged for tuition and fees and what you received in a scholarship and grant and what you paid. So it doesn't matter how you paid that
Okay.
portion. It could be a student loan, could be a parent loan.
Gotcha. That's very, very helpful. What about, so you mentioned grant aid. How does work study fit into this as well? That goes into the student's bank account essentially, right? In many cases, are those earnings taxed? Do they count as a scholarship in some respect? Like, how do we classify that when we're thinking about the cost of college for taxes?
I would think of work study just like a part-time job in high school. So
Okay.
it's a part-time job for the student. It's a job just like any other. There will be taxes taken out depending on how they fill out their W-4 form
Mhm.
with the employer, who is typically the college. So they could have taxes taken out. The student probably wants to file a tax return to get those taxes back because they usually don't have a tax obligation at the end of the year. So they usually get a refund. But the good news is that those earnings that a student has from work study, although they are taxable earnings, they don't affect your FAFSA form and your financial aid going forward. So it's
Good.
not going to drive up the student's income to make them ineligible for aid.
And typically, I recall from past conversations on the show that student income is a big share of the pie in terms of the
Mhm.
FAFSA relative to parent income as a percentage. Is
It
that right?
can be once the student has earned more than $7,000,
Gotcha.
then it starts to be a big piece of the pie.
And does work study count toward that 7,000, or is it in a separate bucket?
It's in a separate bucket.
Great. That's very helpful.
Mhm.
Now let's talk a little bit about these gifts that you get from colleges in the forms of scholarships and grants. Sometimes you'll get a gift, but then you'll have to pay taxes on that gift. And suddenly it feels like an obligation in some
Mhm.
respect, even though you still do get the grant. Are scholarships and grants taxable? Do families have to claim them in some ways on their taxes?
So if it exceeds tuition and fees, so if it's paying for room and board and
Mhm.
books and supplies, then it is a taxable gift, but it's taxed at the child's rate. So the child would claim that on their taxes. So for example, a Division I athlete that's getting a full scholarship of everything, the tuition and fees portion is not taxable, but the room and board, books and supplies portion is taxable.
Okay. And but it's typically a small amount and it's going to be taxed at okay. So and still probably better than having to pay for
Yes.
the additional
Right.
room and board.
Right.
Now let's get into the zone that I really care about, right? Because I got the younger kids. Let's talk about 529s and saving for college.
Mhm.
So first of all, what kind of opportunities are there for people in terms of 529 savings for tax deductions or tax credits? Is there anything at the federal level or is it all state level?
So your contributions can be tax deductible on the state level, depending on the state you live in. But on the other end, when your children are old enough and you're using the money, you can pull the money out tax-free if it's used for the specific qualified expenses that 529s count for. So as long as you're using it properly, you won't ever have to pay taxes or penalties on your 529 savings.
And I assume that there's paperwork that goes to show that these are qualified educational expenses so that you're not paying
You know,
taxes on them.
it's amazing that the IRS doesn't require more paperwork regarding that.
Interesting.
It's only really if you get audited, you would
Hmm.
have to prove that that withdrawal was qualified.
Gotcha.
So you get what's called a 1099-Q when you withdraw from the 529 plan. I would keep that as a document to say, this is what I withdrew and when I withdrew it and what student it was for. And then
Hmm.
you would want to keep copies of your bills from the college to
Gotcha.
say, I use this. And you can automatically transfer your 529 plan withdrawal right to the college. So it's a very clean transaction and there's no question about what was used for.
Interesting. And people will recall that, because contributions to 529s are post-tax, that's why
Mhm.
you're not paying tax when you're using it. It's because you already paid taxes on those funds when they hit your bank account and then you
Mhm.
put them off into that 529.
Correct.
Um, any other documentation that's important for people to keep an eye on when they're making these withdrawals, especially for educational expenses that might not be as clean as, say, a tuition bill? What should I keep an eye on and
Right.
save?
What comes to mind is living off campus. You can use it for rent for off campus, but you would definitely want to keep a copy of the lease or the copies of the rent payments you've been making, books, computer supplies. The 529 expenses, qualified expenses has been growing. K through 12 tuition for $10,000 a year is allowed, so you'd want to keep that tuition bill. You can use $10,000 per child for a student loan payment. So you could keep track of that. And coming up in the future, you can use leftover 529 plan money to put it in a Roth IRA for the student. but that's coming down the
That's
road
new,
this
right?
year.
That's an
Yes.
interesting new
Mhm.
thing. Okay. And that's because Roth IRAs are also post-tax
Mhm.
contributions.
Mhm.
And so they're very similar kind of
Mhm.
investment vehicles. Okay.
Correct.
Any chance that the cost of college will be going down, Laurie?
Your guess is as good as mine. I've been with College Coach for almost 20 years now, and I keep waiting for it to happen. It kind of levels out and the increases slow down, but it hasn't been going down from what I've seen.
Okay. Well, you heard it here first, folks. College tuition not likely to fall. Laurie, thanks for walking us through some of those tax breaks. I know tax season can be really stressful for people, but it's nice to hear that a lot of the benefits you get for attending college do not get taken back by the government when that happens. So that's an upshot for me.
Yes.
When we are back next week, we're going to have Beth again in the hosting chair, and we're going to focus on middle school. So we've got a double episode with a couple of guests from our College Coach team talking all about how to master middle school and get ready for those expectations in high school. If you have any younger students in the house, or if you've got friends of the family who have younger students, yours have long left middle school behind, please do refer them to the podcast. And then we will also talk about something that is a passion project for many of our college finance experts, which is personal finance, how to raise financially responsible kids. And it starts pretty early, but it's a really great investment of time and energy in order to achieve that goal. So we look forward to having you back next week. In the meantime, enjoy the weekend. Be well, everyone.